What's up, day traders? This is Jason G with Responsible Day Trading. Today is Sunday the 15th of October 2023, and this is going to be your market weekly rundown for next week. We're taking a look at the ES charts here, the E-mini S&P futures. As always, we're going to start by looking at what we can expect in terms of news next week. Got that open here on the Responsible Day Trading website. You can find that under the news section. So what do we have? Nothing on Monday, Tuesday, Wednesday, Thursday. We've got a number of news events. These are high volatility news events. So these are market moving news events. Usually we can expect high volatility. Tuesday we have core retail sales and retail sales. That should be a market mover for sure. Crude oil inventories. That's always a big one for volatility. And then on Thursday, we also have initial jobless claims, PMIs, and Fed Chair Powell speaks. So that will definitely be a volatile day. So there's a number of big news events going on Tuesday, Wednesday, and Thursday. Watch out for these events. If you're not someone that trades news and you want to be stepping to the sidelines at least 15 minutes before these news events, have them locked into your calendar because it gets really volatile. And then once it calms down, you can 15-20 minutes after these news events, it will usually calm down. Then you can sort of get back involved, get into new positions in the market. Okay, before we move on to the charts, we do have some news. So I'm going to open up the Responsible Day Trading webpage. If you didn't know already, RDT's annual fall scholarship has been open for a while now. We've been taking applications. We've had some really good ones, really good response from you guys out there for the opportunity for somebody to become, or a number of people to become, a student of our VIP coaching program, absolutely free. Unfortunately, if you haven't applied already, the application deadline was October the 12th, so that's now closed. Next week's going to be our scholarship draw, but we also have several classes running, free classes during the scholarship week. So I thought I'd just pull that up and show you how that schedule looked for those of you that might be interested in joining our free classes during this scholarship week. So you're all invited to attend. On Wednesday, Thursday, and Friday, we have live market analysis with intro to day trading futures, a divergence micro lesson. We'll take a closer look at the RDT courses and programs, and more market analysis, live market analysis on Friday also. And this should be really awesome because the whole RDT team will be getting involved with market analysis. Myself and Lindsay will be doing some lessons. So you get to meet us all and participate, get involved. So if you're interested in that, the schedule's on the website. Just take a look down there. We will be streaming on multiple platforms, so look across your social media, on Instagram, on Facebook, and we'd love it if you join us for any of these lessons or all of these lessons, whatever you feel like, guys. It's gonna be awesome. Okay, let's move on to the market. All right, so let's start by looking at the daily chart, as we always do, with a top-down approach. We're looking at tick charts here, if you're not familiar with them already. Each one of these represents one day in the market. On the daily chart here, on the ES December 2023 contract. So we had this previous resistance area here that was very significant. And finally, back in last May, we broke through that area. We put in a top, we pulled down. And then last week sometime, or the week before, we revisited this previous resistance area to see if it would hold as support. We bounced off of this area more or less. We did overrun it, but a lot of price action going on in this area below. So we found some support here and made a push off of that support. So more recently, last week, we pushed up to the EMAs, found some resistance off of those. We're starting to pull back last week, the last couple days. We are below the zero line. The move to the upside over here was quite strong with the BBs. And then if you look at the pullback, we don't really have a pullback on the MACD. So this is a classic retracement divergence. This pullback looks fairly strong on the price action, but not too strong on the MACDs at this point in time. So with this pullback looking so weak, if it continues that way, and if the BBs stay on the outside of the Bollinger Bands here and start to look like they're going to continue up, we could have what we call an ultimate retracement divergence, right? So we could have the opportunity for a push to the upside in the coming days. Obviously keeping in mind this is a daily chart, but it will help give us a bias, at least into what direction we would have a higher probability. As intraday traders, we are trading the lower time frames and we are trading in both directions, up and down, no matter what the daily is doing. But it's always good to have that bias to see what's going on in the higher time frame, to say, okay, you know, the higher probability trades, or the side of the market to be on, is the right side of the daily chart, right? So if this does start to slide off of the Bollinger Bands and look like it's going to continue to the upside, you want to be looking for those great opportunities for a long position. If it looks like this is going to roll over and back into the Bollinger Bands, then this may well, price action here may well pull down again, retest this area, or even break through it. Once we get below this area, you can see we're in a sort of really big range here of price action. It can really go anywhere. The next sort of significant area, well, I'd say actually this area here is quite significant as well, but the major area is this next support area here. Let's take a look at the next chart, the 28,657, see what that's telling us. So this is quite interesting, more zoomed in view on the more recent price action here. The market has not opened up since last week. We are on Sunday evening, so still pre-market. We'll have a better idea of which way it's going to go at market open. But quite interesting here is what's going on with the MACDs and the BBs here. So I'm just going to draw out some divergence that I see here. It's quite easy to spot between these two pivots, this pivot here and this one here. We have a lower low than this pivot, we have a higher low than this pivot. That's classic divergence. And we also have retracement divergence on this more recent price action here now as well. So if you look at this area here, you can see that the pullback, so we pushed up here and the pullback's about 70% pullback. Compare that to the MACDs, we push up and we get a really small pullback, maybe only 10%, 20% pullback, indicating that this pullback is not particularly strong. It's a bit of a weak move down. The BBs are slowing and rolling, so they may just roll over and continue to the downside. But if we get signs of continuation to the upside, we start to roll to the upside, then this may be an opportunity to go long. Problem is, obviously, we're going into this resistance area here, which is quite significant. We've had quite a bit of price action going on around this resistance area. We've also got the EMA crossover to the downside, price below the EMAs, price below the zero line. One to watch out for. We might just push down here to this level here, play around here for a bit, but definitely one to watch out and see what happens there. So I'm going to move into the 4181 chart, even closer view of that price action here. You can see, as you would expect over the weekend, just sideways choppy, nothing really too interesting to talk about here. We have been in this downtrend since Friday, found our bottom over here. We've just been consolidating since then, so we will wait to see what happens at market open. Okay, just have a quick look at, there won't be much to look at really on the 1597. It's just going to be a similar sort of thing here. Just a big consolidation here, really choppy. This is definitely the type of price action you want to stay away from. It's expected over the weekends or pre-markets. Often we get choppy markets in the pre-market outside of normal trading hours, but this is definitely a sort of price action that we would avoid anytime. So it's very hard to work with. We want to wait and see what's going to happen, see if we can start moving in one direction or the other before we decide, you know, which way we're going to go. But I'm sure with all the news, there'll be lots of volatility and lots of opportunities in both directions for the way we trade. And don't forget to join us on Wednesday, Thursday and Friday for the live classes. It's going to be awesome. We've got some really great content to deliver and share with you guys. And of course, the scholarship winner announcements, which we are really excited about. We have some great candidates this year, so join us for that. As always, if you have any questions, you can leave a comment below or you can reach out to us across all social media channels. Trade well, guys. Keep it on the profitable side and I'll see you soon.